And I would spend hundreds of hours looking at these deals, talking to management, building the financial models, doing all of this work. And when it was all said and done, even if the deal was exceptional, I was told I couldn't invest because I wasn't a rich person and I didn't work at the private equity shop. And I just thought, this can't be true.
Welcome to Expanding Wallet, Home for Empowerment. My name is Andrew Clark, and I'm the CEO of Expanding Wallet. And our mission with Expanding Wallet is to inspire greatness and help you learn skills for creating generational wealth. In today's interview, you're going to find out why more and more investors, including myself, are turning to private equity crowdfunding opportunities. And you're going to learn about KingsCrowd, the first rating and analyst service for the online private markets. It's my great honor to introduce you to KingsCrowd CEO, Chris Lustrino. Hey, how you doing today,
Andrew?
Chris?
Thanks for having me on.
Yeah, absolutely, man. I'm just glad that you can make the time to be on. Let's dive into this and give a little background first on, private equity crowdfunding. If you want to give a little background starting with the Jobs Act.
Yeah, I can definitely break that down for you. So, as you mentioned, it all kind of goes back to the Jobs Act. For those who don't know, as you mentioned, founder and CEO of KingsCrowd. I started KingsCrowd about almost 4 years ago now with the very simple idea of empowering anyone to be able to invest in the next generation of really exciting startups and private companies. This was something that was not possible or even available to the general public till about 4.5-5 years ago. And the reason was because in the grand scheme of the world, right, if you have a Robinhood account, if you have a Charles Schwab brokerage account, whatever account you have, when you go on there and you look to invest in stocks, the stocks that are available to you are what we call public companies, like Google and Facebook and Ford. All of these companies have gone through something called an IPO, where they go and list on a public exchange that allows us all to partake in investing in actual equity in those organizations. But everything that comes before the public markets is what we call private equity. Private equity forever has not been available to folks unless you were a millionaire or a major institution. You may have heard of venture capitalists. You may have heard of private equity shops. These are folks who pool lots and lots of money from massive institutions and very wealthy people, and then they go and invest it in the highest growth asset class there is. And that's venture capital and private equity companies. All the companies that exist that are not yet available in your brokerage account. The Jobs Act said, how about we go ahead and change that rule? Let's make investing in venture capital and private equity possible for literally anyone. And in exchange, companies that can now access anybody to raise capital will have to share information like their financials, like the terms of the agreement, all of that type of stuff that has typically not been shared with the public, but in exchange, they get to raise money from the general public. Now, we've had over 3,000 companies since the founding of the Jobs Act in 2016 that have gone on and raised over $1 billion from everyday investors like you and me. Right now, each and every month, 250,000 individuals are actively investing into early stage companies online via platforms like Republic.co, WeFounder.com, StartEngine.com, and so on and so forth. But I'll stop there. Hopefully that gives you a little bit of context about what's going on in this space.
Yeah, absolutely. And I want to also just dive a little deeper into a few things on here because there is some distinction between, when you get a company that's on the stock market versus these private equity companies. And so I just want to kind of touch on, some of the differences as far as risk and reward. I'll kind of let you speak on it. I can chime in too, but I'll give you the mic back.
Yeah. Interesting question there. So public equity companies, what do they typically look like? Well-established, typically been around for at least 8 to 10 years, oftentimes have well north of 100 million, if not really like 250 million to $1 billion in revenue. They have experienced management teams that have been put in place by institutions that were looking for, certain key characteristics in their management teams. All of this is to say, public companies tend to be very well established, and the odds of them going out of business in the near term are very low. They're not zero, and sometimes public companies do go bankrupt. We see that happen. But for the most part, these tend to be safer investments, well-established management teams, well-established businesses, so on and so forth. To give you an example, right, Uber and Lyft, a few years ago, they went public. They're still around. They're doing well. They're growing, all of that type of stuff. And each and every one of them are, thousands of employees, right? So very well-established companies. Now, everything that comes before that are the opposite of that. Earlier stage, oftentimes inexperienced management teams, very risky, and they don't have tons of revenue. Sometimes they have no revenue, right? They're called pre-revenue, and they're just burning money as they build special technology or whatever it may be. And most companies go through this stage being an organization, right? When they're an infant, right? Before you can run, you have to walk. And before you can walk, you have to crawl. Most of the companies in these early days, the private companies we're talking about, are still crawling and walking. They haven't learned to run yet. So you're investing in a more inexperienced company, but because they're younger, they tend to be worth a lot less. And because of that, the upside, should they do well, is a lot more. So to give you an example, had you invested in Uber, which is now a public company worth billions of dollars, had you invested in it back in 2007 or 2008 when it was founded, and you put $100, that $100 would have ended up being worth about $1 million. If you put $100 into Uber when it IPO'd, it'd probably still be worth somewhere around $100, maybe $125 or $150. So the upside's a lot less, but your risk of it actually going out of business were a lot less as well. So that's kind of the main difference between the two parties. So think company in a garage, starting up, figuring things out, still haven't figured it all out, and may still very well go to zero, versus well-established, already figured all their stuff out and are doing really, really well.
Yeah, and I just wanted to make sure we made this distinction to really highlight the importance of what you guys do at KingsCrowd to help people, make some of these decisions, because one thing that is most platforms where you buy into these private equities, it's not like you can just swap them out and just sell, right? So that's another thing. Your money is actually kind of locked in there. Now, I do know that StartEngine is actually, they've created a secondary market to where you can actually do that, but that's not yet across the board. So that was just something I wanted to point out too.
No, absolutely. So one thing that people should 100% understand, when you invest in these private companies that are on platforms like Republic.co and netcapital.com, so on and so forth, they're early stage companies. They're very risky. And there's another thing that you might have heard is the word illiquid. All illiquid means is once you put your money into it, there's almost no way to get your money back out of it in any period of time that might make sense, if you're looking for a return. So to be clear, when you invest money in a startup, typically, especially in its earliest days, typically you could expect to wait anywhere from 8 to 10 years for that company to go public. And during all of that time, there is almost no way to sell your shares in the company. It's locked up. That money is not coming back out. So once you put the money in, it is not like the stock market where you could go and put in a new order to sell it tomorrow. You put the money in and now you sit and you wait. Now, you mentioned a secondary market, which is being built on StartEngine, and you're absolutely right. Essentially, the secondary market, what they're trying to do is create liquidity, AKA you can put money in and then you can get money out before it IPOs or is acquired. And that's what StartEngine is trying to do. But to be very clear, most companies still don't have availability on the secondary markets, and the markets are still very immature. AKA there are not a lot of people buying and selling on both sides. Thus, you might not be able to sell your shares. So all of this is to set the context that when you put your money in, it's highly risky and it's highly illiquid. However, because of all of this risk and illiquidity you're taking, the opportunity for tremendous upside is also built into the investment.
Absolutely. Yeah. I love your explanation of all of that. And, I just really wanted that part to be clear because it's definitely different than stock investing. So, money management becomes a big thing and how much you're allocating towards these higher risk investments. So, all right, let's dive in now. So walk me through, what my KingsCrowd experience would be like and how you help investors on KingsCrowd.
If you are interested in this space at all, what you're going to quickly learn is that there's a lot to learn, right? This is a brand new market, a brand new investment asset class that has not been available to the general public until 5 years ago. So there's lots of new things that you're going to have to learn. For instance, first you need to learn, well, what does it mean to invest in a startup? And what do I get when I give my dollars over to that company? Do I get equity? I've heard of this thing called a convertible note. What does that mean? I've heard of this thing called a safe. When I invest in a safe, does that mean I actually own equity? There's all these new terms you're going to realize you learn when you come to the private markets versus the traditional things you hear in the public markets. Another thing you're going to learn when you come into this space is that when you look at a startup looks dramatically different than when you're looking at a public company. So on a public company, you're probably looking at, all of their revenue growth, and you're looking at their profitability, and you're looking at if they're, expanding their gross margin by a couple percentage points. Well, in the private space, oftentimes you might be not looking at revenues at all. You might be looking at revenues, but they're burning millions and millions of dollars to generate those revenues because they're telling you we're spending all our money on R&D and investing in technology and all of these things. And so the financials can look abysmal. There's a lot of things about it that don't look good on paper, but the reality is that's the game of startup investing. That's what you're getting into. Now, once you've kind of cleared that hurdle, you feel comfortable with the terms, you've come to accept that, hey, when I'm looking at early stage companies, I'm looking at things like market sizes and team experience and the industry and what makes them competitively differentiated and what have they executed well on. Once you get comfortable with all of that, the next question is, well, where do I go to find the deals I want to invest in? And that's where KingsCrowd really begins to come in. The reason that I started this company was because I quickly saw that we had this proliferation of marketplaces. I already mentioned a few for you: Republic.co, WeFounder.com, StartEngine.com, so on and so forth. Just to give you a sense, if you were to go online today, say I want to invest in a startup, there's about 40 marketplaces where you can do that. And there's over 700 deals today that you can invest in. So then it just becomes incredibly overwhelming. It's like, where do I start? What platform should I go on? What investment makes sense for me? What are the good deals? What are the ones that are overhyped? There's just so many questions that go into that due diligence process before you make an investment. So what we say we do at KingsCrowd is we really help with search, discovery, diligence, and management. So the search component comes into, you decide you want to invest in startups and you decide you want to utilize one of these marketplaces. So then you can come to us and you could say, well, my areas of interest are fintech, and I want to invest in, seed stage companies, aka very early days, right? So you decide to invest in a seed stage company. You could come to KingsCrowd and you could utilize our filtering tools. And our filtering tools allow you to take those 700 businesses that I just mentioned, and now you can filter for only seed stage companies, and you can filter for only, financial technology or whatever industry you care about. And then what you can say is, okay, well, if I'm going to spend my time looking at these businesses, I want to look at the best ones. So KingsCrowd quantitatively rates each and every company that is raising capital online, utilizing over 300 data points that we collect on each one of the companies. So you can filter for the best scored companies on KingsCrowd. Now you've taken over 700 companies and you've probably gotten yourself down to 5 that are worth spending time with. You could click on each one on KingsCrowd and you could start to read and learn up on the business and do your diligence. You can look at how much money they raise. You can look at the terms of the deal. You can look at the investment research we provide around the team, the market opportunity, the industry, so on and so forth. Now you have a really good sense of the 4 or 5 businesses that fit your criteria, that are the best ones quantitatively, and then you can make a decision from there. Okay, of those 5, I want to invest in these 2. And we've taken the hours and hours of work it would have taken to find those deals and vet them on your own, and we make it take minutes. Once you're done with all of that, you can go to the marketplace, you can conduct your investment. And then the last thing we're going to help you manage is we find that many folks, once they get started, they have a lot of fun in this space and they want to diversify because of the high level of risk. Right? We talked about risk in this market. Mm-hmm. How do you reduce your risk when investing in startups? You invest in lots of them. On average, folks on our platform are investing in at least 17 deals, at least 17. And it's adding over time. We'll probably see those portfolios grow.
Exactly.
So we provide a portfolio management tool. So once you've made an investment on any marketplace, StartEngine or WeFounder or SeedInvest, you could come back to KingsCrowd and just like Mint.com, there's other tools out there for kind of managing all your finances and visualizing them. We provide that same type of tool on KingsCrowd, but for all of your startup investments. You can list them in one place. You can get some basic breakdowns of what your portfolio looks like. And then over time, we're going to add the ability to give you triggers on new funding events. And if they exit, we'll give you all sorts of information around that business and how it's performing so that you know what your portfolio looks like.
Yeah, thank you for that explanation. I actually did join KingsCrowd and I looked around a little bit and I did actually add a few things to that portfolio management tool. And I really do like that. So I'm also excited about what you mentioned is coming up in the future to be able to get notifications of future funding rounds. That's huge. I got a question for you now. So I know you mentioned, the research, the ratings. Who is actually doing this? Like, what's their background, or is this like AI algorithm powered? Like, how is this data getting in there?
We do several different things. It's a pretty robust process. We have about 8 full-time folks on our investment research team. So we have 8 full-time on our investment research team. Then we have about another 5 or 6 on our technology team. Those 2 teams kind of coordinate to enable our solution. So what we do is we've built automated tools that every time there's a new listing, just kind of like with the public markets, every time there's a new form filing with the SEC that says, hey, a new company is raising capital on WeFounder, on StartEngine, on SeedInvest, so on and so forth, we automatically pull a lot of different information in about that business. We're talking about financials, terms of the deal. And when I say terms of the deal, I mean, what is its valuation? How much money they're raising, all of that type of information we automatically pull in. I'd say we pull in about 150 to 200 data points automatically, all about the business.
Okay.
Now, the next step is once it's ingested into our system, which is all done by the technology team that has automated a lot of those capabilities, that's where our investment research team comes into play. Each analyst is assigned, several companies. So on a weekly basis, we probably scan about 25 to 50 new companies that are beginning to raise capital on these marketplaces. 100% of the universe of investable opportunities online, we are ingesting each and every one of those and then going through our diligence process. Once an analyst is assigned that opportunity, they then go and collect about another 100 data points. We're talking about things like market size, market growth rate. They're doing analysis around the team. What universities did they go to? Have they worked together with their co-founders? How many co-founders are there? So on and so forth. They try and learn as much about the business as possible and quantify as many elements about the business as possible. That overall adds up to over 300 data points that we collect on each and every company. They then spend over probably 8 to 10 hours a week just sitting with each other in a room, discussing each and every one of the opportunities and trying to get some consensus around what they think about that investment opportunity. Based off of those conversations, we will then do something what we call initiating coverage on about 15% of the overall universe. Just like in the public markets, you have quantitative scoring that goes to the entire universe, right? Morningstar rates 100% of companies out there that are stocks, but then a much smaller percent will actually get an analyst report. So based on kind of our discussions and the data, that will inform deciding where are we going to go and do a deep dive and talk to the founders and do an additional, qualitative analysis about the business and produce a longer form report. So that's what our process looks like. It's pretty in-depth. And the really cool thing is that as we scale our efforts, right, we're already sitting on data on over 3,000 companies that have raised capital to date. And now we're watching how our ratings perform over time. Beautiful. And then we're adjusting and updating our rating system to make it more robust, more unbiased, and more effective. And I'm really excited about the process we built because it's like nothing that's ever been built before.
Yeah, it's amazing, and you found a good opportunity there. There's definitely a gap in the market for something like this. I mean, you have Morningstar, that's huge for mutual funds. There's others out there that are obviously been doing it for stocks. So this is definitely huge to have something like this. So Chris, tell me what's the cost, or tell us what's the cost of KingsCrowd?
If you're just getting started, we have, our free tools, and our free tools are all going to be around that education component. So just as I mentioned at the beginning, as you're getting into this world, there's going to be a lot of new terms and things you need to learn about. You could come to KingsCrowd and you could check out our Crowdopedia section. And that's going to let you literally read up on every term and definition of everything you could ever imagine or want to imagine that comes with investing in the startup world. So that's like the best place for people to start. And then maybe you make your first or second investment and you add it to your portfolio and you just utilize all of the free components we offer to our customers. Then we have a $10, $30, and $50 level per month that we charge customers. And basically, they're going to give you varying degrees of access to our site. So at the $10 level, you're probably going to get about one analyst report per month, where we're going to kind of funnel up one of the opportunities we think is really interesting and say, hey, here's an opportunity worth spending some time with. And that's great for beginners who are just getting started, not looking for tons of deal flow, just trying to dip their toes in the water and learn a bit more about the market. At $30 a month, you're going to get access to all of our analyst reports. You're going to have more filtering tools. You're going to get access to more of our, invitations to events and all of that type of stuff. And then at $50 a month, that's where you get access to Merlin, which is our quantitative rating mechanism that literally rates 100% of companies that are out there and available for investment. So if you're looking to be able to compare and contrast and look at hundreds of opportunities a month, then Merlin is really where you want to be. That's our highest end product. That's for people who are really serious about investing in this market. And we have a lot of, like I mentioned, we have a lot of users who have over 17 investments in their portfolio. So for them, they're looking at tons of deals and then whittling down to a smaller number and still investing in a pretty sizable amount. So that $50 package makes sense for those who really want to build a relatively large portfolio.
Yeah, 100%. Time is money. So if you can use a tool like what you're talking about with Merlin, it'll definitely save a lot of time. If you want in-depth analysis and ratings of private equity investments, then use coupon code EXPANDINGWALLET for a 14-day free trial of any of KingsCrowd's subscription plans. So, we kind of talked about KingsCrowd, but we didn't really get into your background. What were you doing, Chris, before you started KingsCrowd?
Before I started KingsCrowd, I was working on behalf of the rich folks and private equity firms that I was mentioning at the beginning. So I was kind of working for the old guard, right? I was working at a firm where essentially we supported all the private equity and venture shops who were looking to invest in and buy private companies. And essentially, we would conduct all of their due diligence before they decided to make an acquisition or a large investment into an organization. And I would spend hundreds of hours looking at these deals, talking to management, building the financial models, doing all of this work. And when it was all said and done, even if the deal was exceptional, I was told I couldn't invest because I wasn't a rich person and I didn't work at the private equity shop. And I just thought, this can't be true. So after doing about 30 deals over 3 years and getting to watch other people do much better than I thought, okay, this isn't rocket science. There has to be a better way. And that's when I stumbled upon this world. I literally Googled a problem that I had and said, why can't I invest in the private markets? And then I basically became totally enamored by this new market and decided someone had to start telling the story. So this is way back in 2014 when the Jobs Act wasn't even fully enacted yet. And I started talking about it. I was really one of the only ones out there doing it. On May 16th, 2016, when the Jobs Act went and was fully enacted and allowed non-accredited, aka non-millionaires, to invest in this market, I literally wrote a blog post on that day about the birth of this new industry and how exciting that was. And it was an incredible experience. I had so much fun running that blog. And it became very apparent to me during that time when I was talking to all these founders and CEOs in this new space that somehow, some way I had to be a part of it. And I was very fortunate to get a call back in early 2018 from one of the former founders of Napster who said, hey, if I kind of seed, a new company for you and acquire your blog, do you want to build something in this market? And it was, certainly a no-brainer for I, and it's been a pretty incredible journey since.
Wow. I love that story, man. That is beautiful. And that had to be frustrating to sit there analyzing those deals and not being able to take part in that. So love it. And I love what you're doing too, to really educate people as well. I did look at the Crowdopedia portion of KingsCrowd, and I did like that. I'll give a little background real quick about myself, but I've been educating myself on investment since the age of 15. And self-education, growing up in a family where everything was just work hard and save your money, and watch my mom work over 100 hours a week. So for years. So I was just like, there's got to be a better way. And I can tell you, having spent half my life with investments in mind, is that there's never been a better time to be an investor. There's more opportunities than I've ever seen. The problem, though, is that if you don't get educated, you'll be blind to these opportunities and miss them. So what you're doing with KingsCrowd is great work. Really happy to see what you're doing and to educate people. And that's, again, why I started Expanding Wallet, is to help people see some of these things and start to, kind of reduce some of the distraction, right? We're in the information age, but I'd also say the distraction age too, with how much is out there.
Well, I appreciate it, Andrew. And one thing that I would say, I think some of our story does overlap there. So I will never forget, and this is one of the biggest impetuses and reasons why I want to do what I'm doing today, and why I get up every day caring about this mission. I grew up with first generation, Italian American immigrant grandparents, right? They came over after World War II with nothing, less than nothing. My grandfather owed money to his cousin to help him get here. And he was a mechanic, right? He helped build eyeglasses for a while. He worked at Domino Sugar. He worked at a pistachio factory. My grandmother was a seamstress. They had 3 kids and they raised them. I mean, they were, lower class, right? Whatever that term means. They didn't make very much money. They worked super, super hard.
Yeah.
But they did do one thing, and that was buy a house with $14,000 cash back in around 1957. And that was the value of the home, was $14,000. Now, progressively, they bought new homes. Right in the 80s, they went and bought a new home. And then the early 90s, I think they bought a new home. And then in the mid 2000s, they ended up selling their last house a little before kind of the whole housing crisis. And I'll never forget, but when they sold that house, they sold it in a matter of days, and it was over $500,000. And essentially what you could say is my grandfather and grandmother put in $14,000 into a home, and at retirement had nearly $600,000. And suddenly a mechanic and a seamstress were able to go from lower middle class to upper middle class. And I thought that was incredible. I mean, talk about your money working for you, right? And that was really, really powerful and really valuable for our entire family. And it hit me that if you look at the housing market today, yes, things have been crazy with COVID and whatnot, but for the most part, people have been kind of blocked out of the housing market, and the housing market doesn't grow nearly in the way that something like 14,000 to 600,000 did, right? And it really got me thinking from a relatively young age about this idea of, well, how do we help people create transformational wealth? How do I myself experience transformational wealth? It became very clear to me it's all about your investments. But if the housing market doesn't do that anymore, and the public markets increasingly don't provide that anymore, where do you go? And when I discovered that this whole world existed and it had been completely shut off to 97% of us until 5 years ago, I thought, how can we not make this asset class available to as many people as possible? The idea that you could put $100 into 10 startups and maybe one of them hits and becomes $10,000 or $100,000, and then you can reinvest that and that becomes $1 million, whatever it is. This is at least a tool. I am not saying it's going to work, and it's certainly not going to work for everyone. But if you take some chances, you build a portfolio, you get educated, just perhaps over the next decade, the next 2 decades, we will have many, 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 many new millionaires and folks create transformational wealth by investing in this very powerful asset class that has made the rich much, 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 much richer over the last 2 decades. And that to me is a really exciting value proposition. This is how we help lower middle class and middle class folks be able to move on up and create generational wealth.
100% agree with you on that. And I'll just say that real estate was actually where I started out with. Actually was an agent during the crash. Got my license in 2007 and didn't work out so well with the license thing, but I did get a lot of investment training during that time. So I did purchase my first investment property at 24. So 100% agree with you. Real estate, I still think it's a great investment. If you're going to have to live somewhere, if you can own it, that's great and you can afford it. But to your point, there are so many opportunities now. So, really continue to educate yourself. Don't pinhole yourself into one thing. Just continue to learn and grow.
Couldn't agree more. And just to be clear, my viewpoint is you most likely can't just buy one house for your family and create generational wealth that will last beyond, your own generation, right? If you buy a slew of properties and you create them as rental properties and you do all the right things and you really know what you're doing, absolutely. It's a very powerful asset class. But if you don't have very much money and maybe you can only afford $100,000 home, that home might become worth $150,000, but that won't be necessarily life-changing.
Right.
If you own 4 homes and they all become, things change.
And I mean, if you, it all comes down to also like inflation. There's actually a statistic that we wrote about on the blog that I thought was really interesting. We had this article wrote this article about is college even worth it anymore? Because you just look at the cost of it. Now, I would say yes, it's still worth it. If you really want to do something, it's definitely worth it. But guess how much the average student tuition has gone up in the last 50 years?
Oh my God. It's more than I could ever even imagine.
329%. Now, compare that to what the household income has gone up by in that same time period. It's about 45%. So if you do the math, your college tuition is outpacing your income by about 7 times. So that's part of the reason why, you have to also look outside of, what maybe, grandparents could have done is buy property and have a house and just live in it. And that would have been good enough. But unfortunately, that's not good enough anymore.
No, absolutely not.
So let's dive into one more thing now. I'm having a lot of fun with this interview, and I want to have a little bit more fun because KingsCrowd, we can also invest into KingsCrowd, right? You guys have
That's
your own
right.
Series A.
Yeah, we're kind of eating our own dog food, if I use that term. When I started this company, the very simple idea was, if you can utilize these markets to raise capital, in many ways, it could be more effective than raising from the traditional channels. Since founding this company, we have raised, including this round of funding, we have raised a little over $3 million from about 3,000 individuals to date.
Wow.
And with that, we've grown from an idea on a piece of paper to now 350,000 plus subscribers, thousands of paying customers. We've acquired a few businesses along the way. We're 23 full-time on our staff. We have the former CTO of the Dow Jones Business Intelligence Group. We had the former chief counsel officer at Bank of America. One of our largest investors and advisors was a former CIO of Citi. I mean, we're talking about like world-class folks who are involved with our organization. We have built something that I think is really special and is helping to bring the private capital markets to the masses. We've done all of that with capital that we've raised from individuals like you, me, and everyone else. 97% of us, non-accredited investors, right? Non-millionaires. And now we're continuing to do the same. So we are raising our $15 million Series A from everyone. We're on republic.co/KingsCrowd. We can provide the link for those who are listening, but you can go there and with as little as $1,000, you can take a stake in KingsCrowd's business and be a continued part of our growth. And we're hoping over the next 2 to 3 years that we have some pretty transformational growth for our business and for the market.
Yeah, I love that. So this is like a little mini Shark Tank right here. So you heard Chris's spiel, which, I'm definitely going to be checking this out. That sounds compelling to me. And, that's really the thing is if you think about Shark Tank and what you see on there, when people come on and they, give their pitch and the sharks kind of negotiate back and forth. Now it's like being able to watch that, but you actually have the opportunity to invest as well. So it's really powerful.
That's right. And I think the proof is in the pudding, right? That's always what people are looking for. So I'll just give you a couple examples to help people get comfortable with the idea that you can find really exciting opportunities in this market. One of my favorite companies that I recently invested in at the time was a $30 million valuation. They raised over $1 million from about 1,000 investors on republic.co. The company is called Alto IRA. It's a new age alternative IRA provider. They're doing really, really well. So I invested a few $100 in it. Well, a few months later, they turn around and they raise $17 million at almost $100 million valuation from several venture capitalists and major institutions. Just a great story for investors. I got in before them, right? I saw the opportunity before those folks did. Another great example was another company that raised on Republic called Maven. They're an ed tech company that basically allow anyone to become a tutor and have a marketplace of people who want to be tutored by them. They raised, I think, a few $100,000 on Republic at a very low valuation, maybe $15-20 million. And then they went and raised over $20 million from literally the most well-known venture capitalist in the world, Andreessen Horowitz, at like north of $100 million valuation. And these are just a couple of the stories where individuals like you and me got in, and then the venture capitalists followed us at a much, much higher valuation frankly, in many ways, getting less good of a deal. But it's because they didn't want to take on the level of risk that we took on as the earliest investors. There's a million amazing stories like that I can tell you about. But I'll just leave it, to all of you to go and explore and learn about what's going on in this market.
Yeah, 100%. And I've been fortunate enough to land a couple that I'm really excited about, and one is actually going to IPO. So we'll see. That's the first for me. So yeah,
there we go.
That process, I'm excited to go through and see what happens. So market's not doing so hot today, but again, either way,
that's okay.
These are.
Let's think in decades, not in hours.
I
right?
was just gonna say, for me, I've always liked to find a great company and hold on to it and buy more on the dip. So being a long-term growth investor is something I like. So this kind of market is actually kind of perfect for me too. It's just another stepping stone.
What's nice about illiquidity,
Mm-hmm.
aka you can't sell your shares, is that it takes away something you have to worry about.
Yeah.
Maybe I should sell some and then buy some again later. It's just, you set it and forget it, right? You put in the investment and you believe in it until it has an exit or IPO. In some ways, it makes your life less stressful because you don't have to open up the account and see it went down 50%. It's just like, it is what it is until they raise a new round of funding or have some sort of exit event. And for me, it actually is a little bit less stressful than the stock market.
It is. It's funny because I talk about, I actually put out a video on a stock that I really like, and the stock is just beaten down this year. That whole industry is beaten down. It's in the plant-based food space. And so, it's just interesting because I make the video and I'm like, we're looking at what the company's doing. They're doing phenomenal, but the stock is down here. And I think for a lot of people, it's hard to grasp that, that aspect that the stock could be doing terrible, but the company's doing phenomenal. They're just crushing it in their space. And so that's actually really where the opportunity is in the stock market, is when you see that. That
it's a Black Friday sale.
Exactly. And so I guess my analogy is if you think about your favorite food and it goes on sale at the grocery store, the value in it because you love it, right? So that's kind of how I look at when it comes to growth investing in these stocks, and even in startups too. I mean, this is kind of going to be the same deal, where find a company that you love, really look into them, research them, use KingsCrowd, obviously, even if you use what you have for free, I mean, that helps. And then, invest what you can. But again, it's just beautiful to have these opportunities. And yeah, like I said, there's some that I'm really excited about from the startup space. So we'll see how that goes.
Well, and just to provide one last point, to help people. So one of the things you're looking at when you look at a startup is long-term potential. We were just talking about thinking long-term, right? Instead of, in the hours basis, but hey, let me think about the next decade. So there are $13 trillion in private assets. And when I say private assets, I mean everything from startups to real estate, right? Commercial real estate properties. And just think about everything around you that doesn't trade on the public markets. That's private assets. Collectibles, art, wine, all of this stuff that appreciates at very, very high rates has never been accessible and investable online. And now we're seeing everything be fractionalized and securitized, aka we could all invest small amounts in lots of different things that are private. So over the next decade, we kind of see this trend of trillions of dollars of private assets moving online and becoming tradable, which, by the way, is the size of the public markets, except it's the private markets. And our goal at KingsCrowd is really to be the Bloomberg data solution for the entirety of that market globally. We want to own the world's private market data is what it comes down to. And I think it's a really exciting moment in time to get to be at the beginning of an industry that's still in its infancy. So anyway, that's what excites me. That's why I love talking about this stuff.
Yeah.
I think it's going to be a very exciting next decade in this space.
Yeah, I'm excited to see what KingsCrowd does and how you guys grow over time. I think it's beautiful. And Chris, if you're up for it, I would love to maybe do a monthly 15-minute discussion with you on some of these opportunities. Something short, but if we could do something regular, I wouldn't even mind doing that.
Yeah, sure thing. You let me know where to be and when, and I'd be happy to do that with you.
Yeah, I think that would be great. And then lastly, as a thank you gift, I always give my interview guests, because I know, a lot of you guys are busy CEOs running companies. I know what that's like. And I give you an Expanding Wallet t-shirt. And it says "Learn,
All
Believe,
right,
Grow"
check
on it.
that out.
Yeah. Um, for me, it's like, just like I said, it's just like starting from the bottom in so many things. So literally, having to learn and believe in myself and grow. And so I know that a lot of the CEOs I bring on, they have those same experiences. And hearing your story, I definitely know that you do. So people don't always see the work that goes in to build these companies or just to go after a dream. So really happy to have you on, Chris.
Thank you so much. It's been an absolute pleasure, Andrew. I really appreciate it. Love what you're doing, and can't wait to wear my t-shirt.
Appreciate it. And for everybody listening, remember to learn all that you can, believe in yourself, and take actions that allow you to grow.